All right, today we're going to unpack a really fascinating economic story coming out of India. It's this idea that millions of people are feeling richer, but their paychecks haven't really jumped all that much. So, how is that even possible? Let's dig in. Okay, so let's get right to the heart of this puzzle. You've got millions of households in India saying, hey, we feel more prosperous. But when you look at the numbers, their actual incomes have only inched up a little bit. So what gives? It's this amazing paradox that really makes you think about what wealth even means, right? It's not just about your salary. And this quote right here just nails it. This is what economists call the wealth effect. And believe me, it's this incredibly powerful, kind of quiet force that's reshaping family budgets all across the country. So in this explainer, we're going to break down exactly how it works. So what's really driving this feeling of wealth? Well, it's not just one single thing. It's more like a perfect storm of different factors all coming together at once. Let's break down the key drivers, piece by piece.
Okay, first things first, what is the wealth effect? At its core, it's all about how you feel about your money. It's about confidence. Think about it. When the stuff you own, your house, your investments, maybe even your family's gold, when all of that goes up in value, you just feel more secure. You feel richer. And because of that, you're a lot more willing to go out and spend, even if your actual paycheck hasn't changed.
And here are the real building blocks of this phenomenon in India. It's such a cool mix. On one side, you've got things like slowing inflation and some tax cuts, which, puts more actual cash in your pocket at the end of the day. But then, on the other side, you've got the value of things people already own, like gold skyrocketing. Plus, more and more people are moving their savings into financial assets. It's a double whammy. Now, this one is huge. We're talking about purchasing power. With inflation hitting a 99-month low, that's over 8 years. Every single rupee you have just goes further. Your money buys more. Suddenly, the cost of just living feels a lot more manageable. And that alone gives households a real, tangible feeling of relief. Wow. Okay, look at this number. 3.9 times trillion dollars. That's the estimated value of gold just sitting in Indian households. To put that in perspective, that's nearly 90% of the entire country's GDP. Gold has always been this bedrock of family savings in India, right? So as its price has gone through the roof, the value of what families already have has just exploded. We're talking about a massive, massive increase in wealth that's literally just sitting in people's homes. All right, so the theory makes sense, right? But where's the proof? How do we know this isn't just a feeling, but something real? Well, this is where we dive into the hard data. Let's see how this wealth effect is actually showing up in the numbers. Get this, 19.2 crore. That's how many demat accounts, the accounts you need to invest in stocks, existed by March of this year. I mean, just think about that for a second. That is a huge jump from just 4.1 crore back in 2019-20. It's a clear signal that a whole lot more Indians are jumping into the financial markets. And check this out. It's not just about investing. Look at income tax filings. Over the last decade, the number of people filing returns has at least trebled across every single income level. And in some cases, it's quadrupled. The source material calls this a staggering trade-up, and that's the perfect way to put it. It shows that not only are more people earning enough to be in the tax system, but they're actively moving up into higher income brackets. This chart just paints such a clear picture. Look at the explosion in money going into mutual funds. It went from 10 lakh crore in 2014 to over 46 lakh crore in 2023. That's more than a fourfold jump. This is what the experts mean when they talk about the financialization of savings. In simple terms, people are taking their savings and instead of just buying physical stuff like gold, they're putting it into the financial markets.
But this isn't just about numbers on a chart or stock market accounts. This stuff translates into real, profound changes in people's quality of life. We're talking hundreds of millions of people. So let's take a look at how this wealth is actually reshaping society from the ground up.
This number is just mind-boggling. Over 400 million people. That's how many individuals India has pulled out of what's called multidimensional poverty. It's a scale of achievement that's really only been matched by China. And this didn't happen by accident. It was the result of a very deliberate, strategic shift in policy. So the big question is, how'd they do it? Well, the key was a major change in strategy. Instead of just hoping that general economic growth would eventually trickle down to everyone, the approach became super targeted. They started using technology, like the Aadhaar ID system and direct benefit transfers, to pinpoint exactly who needed help and get it to them directly. This plugged up a lot of the old leaks in the system and made sure the support actually landed where it was supposed to. And here's where you see the real world's impact. This isn't some abstract economic theory. We're talking about fundamental improvements in daily life. Look at this. Huge surges in the use of clean cooking fuel, access to toilets, bank accounts, electricity. These are the absolute building blocks of a better standard of living, and they've been crucial in expanding the middle class. Okay, so let's put it all together. You've got people feeling wealthier, you've got real tangible improvements in their lives, and you've got this growing sense of confidence. So what happens next? Well, all signs are pointing to one thing: a massive shift in consumer spending. And on top of everything else, recent policy changes are pouring more fuel on the fire. Things like cuts to the GST, the goods and services tax, are basically a direct stimulus. It's like giving households a discount on pretty much everything they buy, from everyday groceries to bigger ticket items. And what does that do? It leaves more money in their pockets at the end of the month. And the scale of this impact is just enormous. We're talking about an estimated 2 lakh crore rupees. That's 2 trillion rupees in annual savings for households, just from these tax changes. That is a massive tailwind for consumer spending, just waiting to be unleashed across the whole economy. And this isn't just us talking. The experts agree. This quote from an HDFC advisory says it all. All these different factors are coming together to create the ripe environment for a consumption boom. The conditions are just perfect for a dramatic surge in spending.
So that leaves us with one final and really important thought to chew on. The wealth effect is clearly real, and it's powerful. We're seeing this new prosperity take hold, and a big consumption boom seems to be just around the corner. But the big question, the one that really matters, is this new foundation of wealth built to last?